Make sure this is all good. Here we go, live here. Boom. Let me just make sure the audio and everything's all good. Okay, there we go. Live chat on. Hello. Let me just get this. Move this. It's hot. Move this over here. Hello. Let me know if you can hear, see me. Everything's all good. Let me know if you can hear. Yeah, that sounds all right. Oh, how is everyone? How's everyone doing today? Hello, Heath. Hello. How you doing? Today we are going to be redoing last night's boot camp on exit strategies and trade management. So we're going to try and keep as simple as possible. We're going to go over a very few simple concepts, and then we're going to go over some like actionable examples on the charts and a few different ways that you can do this. Welcome to the cold UK, Max. Yeah, freezing here, so that's lovely. Got a long drive after this as well, but got a nice cup of tea here, so keeping warm. But yeah, let me know how your Friday's been, guys, before we get started. Normally, for those who are new to the live, I do a normal live from Sunday to Thursday, which is more chill on the charts, looking for setups to take in the coming sort of night / the next day. Obviously, Friday, I don't do that because tomorrow markets are closed. And then I also do a bootcamp live every single day. So the bootcamp live is a lot more formal, educational, going over literally trading from A to Z. And then in the normal live, we actually mark up the charts, which I do each day as well. Hello, Danny. Hello, Mohammed. Hello, Jason. But yeah, let me know how your day's been first off. Let me know what you've been up to, how you found the charts. I saw some huge profits today, huge, which is really nice. Really nice work, because today's price action has not been easy at all. There hasn't been much movement. There's been only a few positions to really capture like a large move on. So really nice to see everyone do well on that. And then obviously we had last night, we had gold make a huge push. Didn't quite take all-time high. Was just literally a huge like liquidity grab. It was crazy. So coming off that, definitely interesting price action today. But it shows, you know, bulls are definitely in control of this market. We'll see if we can take an all-time high before the end of the year. Got in sale currently on gold. Okay, nice, Katie. Hello, John. Hello. But yeah, let's get started. So in this one, we're going to be going over exit strategies and trade management. I did do this yesterday, but it seems like the audio and everything kind of cut out. I was in between places yesterday, so it was very difficult. But this is a very simple one in terms of key things to do, and then in terms of optimizing it for you. Because exit strategies and trade management are very particular on each trader. And that's because, you know, some people, they're going to want to be in and out quite quickly. Other people, they're happy to let trades run into swing trades. And this is something which I really like. Hello, Scuba Kid. This is something which I really like to do. And that is allow day trades, scalps, etc. to turn into swing trades. It's something that's proven very well for me, and I know for a lot of members as well. But if you haven't got the patience and the discipline, and that's fine, you know, understanding the type of trader you are, understanding that is important. If you haven't got that patience to really hold on to those swing trades, then you're going to have it in a slightly different way as well. So definitely tailoring your exit strategy and your trade management to the type of trader you are is pivotal to, you know, really extracting the most out of your system. So key thing to start off with is the stop loss to break even. Now, I'm going to go over sort of what this is, why it's important, And it's such a key concept, which we've spoke a bit about in previous bootcamp sections, but I really just want to deep dive into why stop loss is so important, when to get that stop loss to break even. There's a lot of people say stop loss to break even. I harper on about it a lot, but it seems like a lot of people don't necessarily involve it into their trading. And so basically we're going to do a deep dive on that first, and then we're going to continue throughout this bootcamp section. Hello, Simon. Hello. Yeah, we can now. Probably a lot of you got some Christmas shopping ahead of you. I did go get some Christmas shopping. I should probably hide that, actually. I did do some Christmas shopping earlier on, very quickly. I don't know about you guys, but I like to be in, out, gone. Okay, I absolutely despise Christmas shopping. I'd rather get someone else to go do it. So yeah. Hello, Los Blancos. Los Blancos, over these past few days, a lot of traveling, a lot of different meetings in a lot of different places, and still keeping on top of a lot of things. There's a lot of things to sort in December, just so many projects going on, with so many different people, so getting them all managed, getting them all moving forward, and then obviously traveling and family stuff in between that as well. You know, Christmas is a busy time for everyone, isn't it? So no excuses, but yeah. Hate shopping, do it online. Yeah, I completely agree with that. Completely agree. Zara gifts. Mohammed, make sure you're around on the Christmas live. I'm gonna do a Christmas live. I believe I said 6 p.m. or 6 or 8 p.m. On Christmas Day. So if you can spare, a few minutes, come join us on that Christmas live. It'd be really cool to see you. I understand, Christmas is a busy time, so if you can't, that's absolutely fine. But I will be doing a big Christmas live there. Won't be very much trading related, but it'll be a fun one. Definitely a fun one, and we'll have a good laugh. Maybe give out some presents as well. I think I'm ahead of Max. I anticipate a pullback before it pushes on, but then bottle it if it pulls too far. Then often missed before a big move. Chris, yeah, definitely. I hear this so much, giving the trade some breathing room and just having that concrete. Every day is a gift. Love that, Chris. But just having that concrete mentality of you will not touch the trade until it reaches these two parts. And this is something which I'd like to touch on here. So with stop loss to break even and a trade running 1-to-1, let me know in the chat if a trade running 1-to-1, do you know what that means, or do you not know what that means? If I say the trade is running 1-to-1, let me know if you know how to figure out a trade's running 1-to-1. Let me know if you understand that, because I do get a question a lot, which is how do I know if a trade's running 1-to-1 risk to reward? So okay, we'll go over that. So let me get this up here. Okay, so with trading, you can put a trade. When you enter a trade, you've got your stop loss. Okay, let's say we've got a stop loss here. Okay, you got your stop loss. You should be entering your stop loss before you enter the trade, because without a stop loss, how do you know how much you're risking on the trade? How do you identify the risk on the trade? So you should enter every single trade with a stop loss identified, with a stop loss in place, so you can see how much you're risking. Because if you don't know your stop loss, you can enter the trade with X amount of lots, and then when you put your stop loss on, you can be over risking or even under risking on your trade. So before you enter the trade, you need to know your stop loss. You need to know the invalidation zone, so where your trade becomes invalidated. This is extremely important. So let's say we were entering a buy position here. Okay, let's say our entry was here. Okay, as we're entering the trade, we need to identify our stop loss. So before you pull that trigger on the trade, you need to know that stop loss. Okay, where does the trade become invalidated? Okay, this is very important. Basics, okay, I understand those who are more advanced are here as well, but it's very important to get those foundational trading habits in play. So when you're entering a trade, there's a few non-negotiables. These aren't just non-negotiable, need to be done. Okay, first one is stop loss. You need to have a stop loss when you're entering a trade. That is the place where your trade becomes invalidated. You need to have that so you can identify the risk before you enter a trade, okay? Because if you don't know the stop loss, then you don't know how much you're risking. You can't take a trade without knowing how much you're risking. It's just very risky, and it makes consistent Smooth profitability, very difficult. And also, you might have a few months of very up and down periods, and you don't know if in those down periods, you don't know if that was just you over risking on trades or if it was down to your system. If your risk is very concrete and uniform, what do I mean by this? I mean, you're risking a set pound to manage trade. You're risking £20, £30, £50, £100, £1,000, whatever it is on each trade. Then if you have a losing period, you know it's not down to your risk. You know that is something to do with your system. So then you can look at that period of time, go back to that price action and see, okay, maybe there was a lot of news during that period. I should probably avoid news trading. Maybe you traded a lot on Monday and Friday when you probably shouldn't be trading during that period. Maybe markets were extremely trending during that period and you know, okay, you need to adjust things during a trend. Okay, you can pull those ideas from price action, okay, if you know your risk is uniform. If your risk is uniform, then there's too many variables. It might be you were just over risking on a couple of losers that ended up ruining that progress there. And you don't know that unless your risk is uniform. So that's why having a stop loss when you enter the trade to keep your risk uniform is very, very, very important. So that's first non-negotiable when entering a trade. Setting your stop loss and identifying your risk pound amount. Let me know if you know how to do that. Let me know if that's confusing or if you've got any questions regarding that. I want to make sure that is extremely clear. Just like everyone knows how to do that. Let me know if you don't know how to do that. Let me know if you do, and then we'll move forward from there into a few other non-negotiables when entering a trade. All good. It's easier on VT than MetaTrader. I completely agree, Chris. Completely agree. This is why I always encourage people to use the Brokers app or CTrader, just because it makes it very, very easy. I mean, if my mum can enter a trade and know the pound amount that she's risking, then I'm 100% sure anyone here can do the same as well. Hello, Steph. How you doing? Because it gives you a pound figure. Yeah, exactly. Exactly. And this is why I'm so against, especially MT4. You can do it on MT5, but it's a bit annoying. But especially on MT4, it's just not it's not smart to do it all. This is why, you know, trading on MT4 really, and trading on MetaTrader really for any sort of beginner traders is probably not the way to go, because you'll just end up entering trades risking a variety of pound amounts and your risk won't be uniform. Yeah, exactly. Same as ChartTrader, exactly. So yeah, it seems like everyone's pretty okay with that. If you're not okay with that, then let me know. I've got a video that explains exactly how to enter each trade, putting your stop loss and knowing how much you're risking. Let me know. You will have received it when you join the private group, but let me know and I'll resend it to you again so you can enter a trade using uniform risk. Okay, this is very important. I like to hammer that point because not enough people really do that, and they think it's down to their system, but in reality their risk management's all over the place. And some periods their account will be growing really quickly, but they'll be over risking on winning positions or something, and they'll think, okay, this is really good, when in reality they're just over risking on certain winners, and they're just getting lucky. A lot of people put a good system and good progress down to system, when in actuality they just did get lucky. So make sure your risk is uniform. Okay, that's perfect. So that's first non-negotiable. Stop loss and knowing how much you're risking on the trade. Okay, second non-negotiable is your checklist. Now, I encourage every single person here to have a checklist when you're entering the trade. Okay, I did give a good checklist in the private group the other day, but just sticking to your system. In your system, identify, 3 to 5 points, not loads of points. If there's too many points, if your system is do this, then this, then this, then this, then this, then this, then this, there's too many variables. So then you'll end up over-optimizing your system for previous price action, okay? Again, if there's too many variables, you'll end up over-optimizing your system for previous price action. Your system, you'll optimize it to work extremely well on price action that has already happened. But price action that already happened has no bearing on price action that will happen, okay? So not too many variables, 3 to 5. And that 3 to 5 checklist, it can be as simple as money flow on the Fu Manchu in red or something like that. If you don't know about the Fu Manchu, we'll explain it in later sections, but this is just an indicator I use. Price above a certain EMA, a retracement into a certain zone, okay? Just 3 things which are in your system which are non-negotiable, 3 to 5. For me, that would be a pullback into a level. I do not enter trades that are not in a nice level. 2, on the 1 to 3 minute time frame, for buys, money flow in the red, for sells, money flow in the green. And then what's another non-negotiable that I look for? Bias outlined on the higher time frames, okay? So just 3 to 5 things in your system which are non-negotiables, a checklist, okay? Every trader has a checklist. Make sure you've got a checklist. So again, let's just go over those 2 non-negotiables so far. So first one is a stop loss when entering the trade. You need to know how much money you're risking on the trade, and it needs to be uniform. 2, you need to have identified that your checklist has been ticked. 3 to 5 simple points in your system which have been met. If you're a brand new trader, this can be super simple. Price is above a certain EMA. We've had a pullback into a zone that you've outlined. And this can be as simple as, okay, I see price has bounced here. I'm not going to enter a trade unless we have a pullback into this zone here. Just identifying areas of support and resistance on the chart. A checklist. If you need help with building a checklist for yourself, drop me a message or message in the Discord or something like this, and we'll happily come up with a short checklist for yourself. Let me know if that makes sense, and then we'll move forward from there. Agreed. Yeah, Katie. I'll go up now. I'll read out that checklist on here for those who are watching at a later point. Let me just get that. Okay, here it was. So I said the checklist is like rails. You know, when you go bowling, I'll read out the full message again because I do think it's a really important message. So basically, it was on about survival in trading, and the reason I'm on about survival is because, again, a lot of you have been here before, you'll have heard this before, so I do apologise for repeating myself. But if you walk into a bathroom and the tap is spewing water and you need to fix that tap, it's going to be a pain to fix it if water's spewing everywhere, okay? But if there's no water and you need to fix that tap, then it's easy. You can focus, you can concentrate, it's easy. If you're bleeding money, okay, then it's really hard to optimise your system because you're bleeding money. You need to focus on survival first. Okay, so this is the analogy that I gave. If you take 2 people bowling, one of them you tell to aim directly down the middle and you come up with a strategy for them and how to throw the ball, okay? The second one, you put rails up and tell them to throw the ball randomly. Who wins? My bet is on the one with the rails up, but it would be pretty close. But who tried harder? Who is more mentally fatigued? Who is more likely to make a mistake? The one who has the strategy. Okay, had to work 10 times harder and really think about it. Whereas the other one just threw the ball. Putting the guardrails up means you don't have to think as much. And even if you throw an absolute stinker, you know it can't be that bad. Again, the rails are up. Better for mentality, far easier, less work, more scalable, great position to be in to scale up that capital further. The benefits are endless. The rails are your checklist. A great start is, now this is the checklist which I gave, risk per trade. So you risk a set pound amount per trade. You can risk £20 per trade, £30 per trade, £40 per trade, whatever it is. I'd recommend for this, something which I do, is at the start of you can do either each week or each month, you come up with a percentage of your account. So it can be, you know, whatever percentage, preferably on a higher capital account under 1%, but let's say 1 to 2%. Then you put that into a pound amount. So let's say you're on £1,000 account. 1% would be £10, okay? So then you risk £10 on each trade for that week or that month. Then at the end of that week or that month, depending on the compounding period which you want, you can either compound each week or compound each month. Then at the end of that, let's say week, you come up with your new account. Let's say it's £1,100. then that's your new amount. You're going to now risk 1%, which is £11 per trade, and so on and so forth. That's number one. Number two, if you have one loss, two losses maybe, you stop trading for that day. This stops you over trading when price action clearly isn't aligned with your system and your mentality. That's a really, really big one. And then third one is only taking profit when your trade has run one-to-one risk to reward, which I'll get into now. And then the final one is only take a trade at a level of support and resistance that you've marked up. It can be as simple as identifying where price has bounced on your chart. Price has clearly bounced here, price has clearly bounced here, price has clearly bounced here, price has clearly bounced here. Identifying just the most basic support and resistance you can possibly find, and only taking trades when we have pullbacks into those areas. So you know you're getting in at a nice level. Okay. Let me just get back on this. That's all good, KT. Comments hope you well. I'm still not able to access the Discord. I've sent a few messages to the support. Okay, Darren, I'll put that in my notes and I'll literally message you directly after this and sort it straight away. Okay, so back to risking a stop loss. So we were talking about stop loss before. So when you enter a trade, you want to identify your stop loss. Okay, so let's say your stop loss is here. If we put the trade thing on our chart, which is this little indicator here, this little, tool on TradingView, and you put your stop loss there, this is the risk to reward ratio on your chart. When this is 1, that means your trade is running one-to-one risk to reward, okay? That's what it means. So when I say a trade is running one-to-one risk to reward, whatever your stop loss is, that flipped on its head is your like one-to-one zone. So if you risk £20 on the trade, okay, that means when this stop loss is hit, you'll lose £20. When you're £20 in profit, that means your trade is running one-to-one risk to reward. If you risked £50 on the trade, okay, and your trade is running one-to-one risk to reward, okay, that means you're £50 in profit, okay? So we'll go over a few little examples to really dial this in. So let's say I entered, one second, let me get rid of this. Let's say I entered this trade here. We had a little breakout from this sort of channel down here. I had my stop loss under here and take profit up here. Okay, whatever. Okay, if I risked £100 on this trade, so if my stop loss was hit, I lose £100. If the trade is running 1 to 0.5 risk to reward, how much profit am I in? Okay, so I've risked £100 on the trade is running 1 to 0.5. How much profit am I in on that trade? This is very important to dial in. £50, exactly. Okay, if I'm running 1-to-1 risk to reward, how much profit am I in? Let me know. So if I'm running 1-to-1 risk to reward and I've risked £100 on the trade, how much profit am I in? And by the way, guys, if you don't know the answer, just give it a go. The best way to learn, the only way to learn to ride a bike is to get on that bike, okay? £100, exactly. Okay, now I'm going to flip the script a bit. What I'm going to do is I'm going to move this down here, okay? I'm risking £100 on this trade, and I've entered here, okay? If I'm £60 in profit, okay, what risk to reward am I running? So I've risked £100 on the trade. So let's get up here. I've risked £100 on the trade. It's really hard to type. What is the risk to reward that I'm running at if I am £60 in profit? Let me know in the chat. 1 to 0.6, 0.6. Exactly. I'm 0.6 risk to reward in profit. I am 0.6 times £100. I'm running £60 in profit. Now, if I risk £100 on a trade and I'm £100 in profit, what risk to reward am I running at? Let me know in the chat. I just want to dial in risk to reward, what it means in comparison to your risk, because this is very important when it comes to trade management, exit system, etc. Because we're going to be talking a lot about risk to rewards. If you don't know about risk to rewards, it's going to be very hard to dial that in. Okay. What about if I'm risking £50 on this trade and I'm up £150? What risk to reward am I up in the trade? So I'm risking £50 on the trade and I'm up £150. 1 to 3, 1 to 3, 1 to 3. Okay, Scuba, so the reason it's 1 to 3 is because if I risk £50 and I'm up £150, I'm up 3 times my risk, okay? So therefore, it's 1 to 3 risk to reward. You can call this, if you don't want to use risk to reward, you can just call it R, okay? So when you're 3R in profit, it just means you're 3 times your risk. If your risk is £50, 3 times £50 is £150, okay? Let me know if that makes sense. Let me know if it doesn't make sense. Please let me know and we'll dial in, because understanding risk to reward is very important so you don't close winners early. Because if you don't know risk to reward and you risk £50 in a trade and your trade's running £30 in profit, you might think, oh yeah, £30 in profit. But risking £50 to make £30 in profit, your winners are going to be far smaller than your losses. And that is not a good way to be as a trader. You want your winners to be bigger than your losses, okay? So understanding how much you're risking in the trade and understanding what risk to reward you're running at allows you to identify, okay, I risked £50 on this trade. I'm running £30 in profit. This trade hasn't run that much. I'm not a one-to-one risk to reward. I'm not going to touch the trade. Whereas if you understand that when you're in £60 in profit, and you've risked £50, you're 1.1 risk to reward in profit. Okay, that means your winner is bigger than your loser, which is where we want to be. Okay, so let me know if that makes sense. Let me know if it doesn't make sense. Let me know if you want to clarify anything. Let me know, and if you're watching this at a later point, drop me a comment and I'll happily get back to it, or message me on Telegram or Discord or anything like that, and I'll happily get back to it. No, Scuba. So if you're 1.5 times £50 is what? 1.5 times £50 is £75. Okay, so it's so 1 times 50 is 50. 0.5 times 50 is 25. Okay. So I think the best way to think about it is in terms of R. So risk to reward 1 to 3. The second number is your R. So if you're 2R, you're 2 times the risk. If you're 1R, you're 1 times the risk. If you're 5R, you're 5 times the risk. I think that's a better way of thinking about it. Yeah, it will be now, Chris. Yeah, there won't be much movement now. Okay, it seems like everyone's got. And again, Scuba, great to ask questions, mate. Really, really, really good. Really, really, really good. Okay, so going back to what we said before, which is stop loss to break even at 1 to 1. Okay, so I'm gonna go over a few examples. Okay, if I risk £50 on a trade and I want to move my stop loss to break even when the trade is running 1 to 1, how much profit do I need to be in to move that stop loss to break even? Let me know in the chat, and then we'll go over a few examples. And again, if you don't know how to risk a set pound amount on each trade, drop me a message. I'll send you through a video. On Telegram there is, or on Discord, just at me and I'll send through the video. £50, okay. If I risk £200 on a trade, and the trade is running 1 to 1 risk to reward, okay, how much profit am I in? Yeah, fees are obviously a small amount, and we do need to factor them in a little bit. But with this, I think it's fine to put that to the side a little bit now. I appreciate that. I appreciate that, Simon. Okay. Okay, perfect. Seems like everyone's got this this dialed, which is really good. So, again, I like to explain why something's important to know. And the reason this is important to understand and important to know is because you can easily fall into the trap of closing trades early when they're not even running one-to-one risk to reward. And the problem with closing trades early is your losses are going to be a lot smaller than your winners, which is very difficult to profit in. It means you're going to have a lot higher win rate, you're going to have to be a lot more accurate, and it's just not, it's harder to profit, okay? So that's why it's very, very important. And moving on from that, now that we understand what risk to reward is and how to know when you're one-to-one risk to reward, moving your stop loss to break even when your trade is running one-to-one risk to reward, again, if you're risking £100 when your trade's £100 in profit. If you're risking £50 when your trade's £50 in profit. If you're risking £15,000 when your trade is £15,000 in profit, your stop loss goes to break even, okay? Now, why is moving stop loss to break even such an amazing tool in a trader's arsenal? That is because when your stop loss is at break even, okay, you can only make money. You can't lose money, okay? So just think of how amazing that is as a position. Removing the FOMO of, okay, but it could hit break even, then it could go and make me loads of money. Ignoring that sort of emotional outlook on it, pure objective, okay, if your stop loss is at break even, you can only make money, okay? If I take anyone who's not in the trading space and I say to them, okay, I've got £100 here. This is yours, okay? You can only make money. You can come out of this with zero, or you can come out of this with £100, but you're not going to lose money. They're going to look at me like, this is amazing. This is the best day I've had in ages. This is amazing. I can only make money. I could come out of it not losing money, but I can only make money. It's an amazing position to be in. It's good for your mentality. It's good for your trading. It's very, very, very good. So let me know in the chat now, does that make sense why moving your stop loss to break even is such an important thing, is such a good thing in your trading, okay? Let me know in the chat now. Peter, you can drop me a message on the Telegram, which is linked on the YouTube description. Drop me a message and I can send you through the video, which is how to risk a set pound amount per trade. Yeah, Katie, I saw it. Is break even the £100 profit? No, break even would be where you entered the trade. So that's a good point. Actually, going over where moving break even is. So when someone says move stop loss to break even, that means, if we've put a trade on here, that means moving your stop loss to your entry price. So when you've heard stop loss to break even, and you're wondering, what does that even mean? That means moving your stop loss to your entry price. Because if you get out where you entered, excluding fees, then you're not going to lose money. You come out as zero, okay? You buy an apple for £1, and then you sell it for £1. You've lost no money, okay? So that's what moving stop loss to break even is. All it is moving your stop loss to your entry price, okay? Let me know if that makes sense, and then we can move on from there. Protect capital is the #1 goal, 100%, okay? We're in this to A, not lose money, and B, make money, okay? But not losing money comes first. The one rule of a trader is capital preservation. To be in this game, you've got to have money to play, okay? And so capital preservation is the most important thing in trading, by a mile, okay? And that's why this section and in this, what we've gone over now, is so important, okay? It means you've got the tools to survive, okay? That is the most important thing, okay? If you're in the middle of a desert, okay, do you want a knife and a bow to go hunt? Or do you want water to survive? You want to survive, okay? You can sort out hunting and everything like that later on. The main thing is survival, okay? That is the main thing, okay? So, move in, break even too early. Simon, the best way to do that is what I outlined here, which is only adjusting that trade when you are running one-to-one risk to reward, okay? This stops you from adjusting trades too early. So, if you risk £20 on a trade, and so if your stop loss is hit, you lose £20, only moving stop loss to break even, only taking partials, only doing anything with the trade when that trade is £20 in profit, again, if you're risking £20, is such a good mentality to have, because it means you're not going to be faffing around with a trade that hasn't even moved. You're not going to be moving stop loss to break even too early. You're not going to be getting out of the trade too early. It's not going to be happening, okay? So let me know if that makes sense. I think it's a brilliant rule to integrate into your trading, and it means like just those few rules will allow you to survive these markets. And a lot of people here, and me when I started out trading, you know, you lose money, you bleed money, okay? We want to survive. The few rules which we've gone over tonight, which are risking a set pound amount per trade, only moving stop loss to break even, taking partials, closing the trade, once your trade has ran one-to-one risk to reward, those two things with a very small edge, getting in at support and resistance, whatever it may be, will allow you to survive and fight another day in these markets. Pairing that with, if you have a loss on a day, not trading for the rest of that day, it will help you so much, okay? So again, let me know if what we've discussed so far makes sense, and then we'll continue onto the next part. Cues you different on some pairs. Yeah, Chris. So XRP, which is crypto, the spreads in crypto are particularly bad. This is down to a lot of reasons, but crypto isn't as monitored as other markets. It's still the Wild West, so you will find across all exchanges and all brokers, unless they're using the same liquidity provider, that prices vary a lot. This is how in the crypto space there's still sometimes arbitrage opportunities. This is a bit of a tangent. If this doesn't make sense, then it's absolutely fine. But and XRP just isn't as liquid. There isn't a lot of buyers and sellers of it in the grand scheme of things. So the spreads on it, so the difference in price can be drastically different. You know, if one exchange, if one broker has a lot of liquidity for that pair, then their conditions are going to be very different to an exchange or a broker that doesn't have as much liquidity for that pair. Why don't we move stop loss to 1R? If you move it to, if your trade is running one-to-one risk to reward and you move your stop loss to one-to-one risk to reward, then you're just going to get stopped out, because what's happening there is your trade's running, let's say here, you're moving your stop loss here, so to price, so you're just going to get stopped out immediately. 0.5R, no, why not move? You can move it to 0.5R, but it's just not enough breathing room. I like to think of markets in terms of, you know, there's emotions going on. We want to allow our trade breathing room still. We want to reduce risk, but allow it to move where it's looking to move. We don't want to, you know, give the trade, okay, unless you go directly up now, I'm out of the position. We don't want to be like that. We want to give it a bit of breathing room. And look, a lot of trade management and a lot of optimizing your system comes down to how you trade specifically, journaling and finding what works for you. You might find that you gain a small edge by moving your stop loss to 0.5R instead of moving it to break even. But you'll only know that from journaling your trades and comparing results between moving it from stop loss to break even to moving it stop loss to 0.5R in profit. All good, Katie. All good. Good point. Okay, cool. Already risking 0.1%. Can't wait to work my way up. Nice, Blake. It really good as well. That is amazing to hear. Increasing your risk slowly is the way to go. And look, on a 90k account, you don't need. This is to do with the private funding service we have inside the private group. You don't need to risk a lot on the account to make serious money. I mean, if you get that up to 0.25% risk and you have a few good trades a month, you're making thousands of pounds. Like, which anyone's happy making in trading. Like, that's good. No, Chris, that isn't 100 guaranteed. So if you move your stop loss to break even here and you're running 1-to-1 risk to reward, £100 isn't guaranteed. So let me just clear that point up. If you risk £100 on a trade and your trade is running 1-to-1 risk to reward, that means you're £100 in profit, okay? If you move your stop loss to break even, the worst thing that can happen is you get exited, it hits stop loss at break even. You don't lose any money, you don't make any money, which is fine. You didn't lose money, that's the main thing. The best case scenario is your trade continues to go up into profit. So you haven't got profit guaranteed, but you haven't got a loss at all. So you're guaranteed not to lose money, which is where you want to be. Chris, exactly. Yeah, dropping a bit now, gold is. Okay, let's continue onto the next point. If you got any questions on that as well, drop them to me on the Telegram. It's absolutely fine. So, not closing any profits until the trade is running 1-to-1 risk to reward in profit. We've gone over this now quite a few times, but this stops you closing winners too early. And the reason why I'm hammering this point so much is because I definitely saw on the last challenge a lot of members closing trades too early. Their losses would be £20, £30. And their winners, they'd close them too early. So they'd be making like £5, £10 on a winner, okay? No, you want to be making more on winners than you do on losers. Although, if we go down a deep rabbit hole, then, you know, the smaller the profit, the higher the win rate, so it does even out. But something we just see in the trading space is that if your winners are bigger than your losers, you're more likely to be profitable over a long period of time. So, yeah. I'm planning on saying 0.1% till I am on a bigger account with good safety cushion. Brilliant. Yeah, I think using that account, literally, as you said, literally as like a safety blanket, you know, it's your nest egg. In reality, to those who do go on to, you know, the private funding service that we have in the group, that account is like your key. Like, it's your key to full-time profitability. Treating it as such is important. You know, slowly scaling up. There's no need to rush, okay? Just by slowly scaling it up, after a few months, you can be making a full-time income on that, as we've seen many members do, okay? There's, I mean, who was it who's up like 30K? 30K this month. I mean, we've got a lot of members over 10K, but when they hit that 30K plus mark, that's pretty crazy. And so it's your key to literally full-time consistent trading. So treating it as such is definitely important. Hello, Hammer. So I hope that makes sense so far. Let me know if that makes sense. Let me know the concept of you want your winners to be bigger than your losers. Let me know if that makes sense. Let me know if you know how to achieve that through what we've gone over so far. Yeah, I used to close early. Now, after last challenge, I don't close losses early and winners just enjoy. Add to it, have the balls too. Yeah, and Katie, that is it. You just got to have have the balls to let them run. And we've all been there. And trading is one of those things, it psychologically ruins you. The markets want you to close early. They want you to take that little bit of profit, okay? That is not like long-term profitability. That's not congruent with it. I keep having stop loss is showing as invalid. Please help. So, Peter, there's probably a few things you're doing there. So, A, are you in a buy position or a sell position, Peter? Let's just get that sorted, and then we'll go on to the next part. So, Peter, are you in a buy position or a sell position? Nice cup of tea. Hope everyone's having a great Christmas as well. Hope it's not too busy for you, and I hope you're having a good time. Man, I'm actually addicted to cups of tea. I can't have coffee lately because caffeine it's not good for me. It's not good for me at all. So, light. How you do that is whatever you risk on the trade, once you're that much in profit, you're running 1-to-1 risk to reward. So, if you risk £20 on a trade and you're running £20 in profit, you're at 1-to-1 risk to reward. If you risk £20 on a trade and you're £40 in profit, you're 1-to-2 risk to reward. How do you know how much you're risking per trade? I've got a video, so if I explain this with words, it can be a bit confusing. If you want to know how to risk a set pound amount per trade, drop me a message. I'll send through the video on exactly how to do that. Sell. So if you're in a sell position, is your stop loss above your entry price? Make sure your stop loss is above your entry price. If you're in a sell, your stop loss needs to be above your entry price. If you're in a buy, your stop loss needs to be below your entry price. This sounds this sounds basic, but I still have members now who are doing very well, and they still message me like, Max, my stop loss won't go through. And I'm like, is your stop loss above your entry? Like, have you checked your entry price and you made sure you stop loss? Okay. I see what I've done there. It still happens, you know. So no harm done. Light always. Does that make sense? Does the 1-to-1 risk to reward thing that I said make sense? Does that clear that up? Let me know if it doesn't, and we can sort of re-go over and make sure that's fully in. By the way, I'm not at my normal setup. I'm back in the UK, not currently in Dubai, so a different setup. We've got the Coles Trades poster on the wall though. But yeah, not currently at my normal setup. My normal setup in Dubai now looks, I'm quite happy with it, especially with the Christmas decorations. It looks good, so I'm a bit sad that I can't bring it with me. But Peter, let me know once you've checked that, and Light always, let me know if that makes sense. And anyone else who's got any questions regarding this, please let me know, and I'll happily go into detail on it, and we'll happily go over any questions regarding that. Again, this is mainly going over the basics in this one to do with trade management, making sure your risk is correct, when to move that stop loss to break even, and things like this. Okay, I think we've cleared up a few important points tonight for a few people, which I'm very, very happy with. Oh, yes, Chris. Honestly, I'm addicted to tea right now. No sugar, just straight tea. It's so good. I'm going to go through... I'm going to be pure tea by the end of Christmas. It's going to be brilliant. I can't wait. But yeah, let me know, like always, Peter. Let me know if that makes sense, and then we'll continue into the next part. And also, again, hope everyone's having a great Christmas. I will be live on Christmas Day, going over, just having a laugh. And if you've got any questions regarding the private group as well, please let me know. I'll happily answer any questions. The private group is the best trading group in the world. We've got the best signals, the best analysis, the best courses, the best community, everything. We've got full bootcamp A to Z. We've got the best educators, the best support team. It's the best place to learn and grow as a trader. The amount of money that a lot of members are making is absolutely insane. We've got members who have gone full time, which is just incredible. We've got members who have started off making a few £100s here and there, and now, for example, Jay, who are making 6 figures plus a month. Well, hopefully this month he will, which is just absolutely phenomenal. Yes, that makes sense. Okay, good. Good like always. Okay, that's good. Afternoon, Max. Been busy month for me. Year end at work and trying to get ready for Xmas with the little ones. I think I took 2 trades all December and haven't been able to join any lives. It's all good, Trevor. You know, I understand, you know, December's busy. Hope the little ones are all good, and I hope you're having a good Christmas, hopefully. Hopefully it's not too stressful. You know, it's almost time for Christmas and, like, Christmas Day, just you know, chill out. You've got some nice plans over Christmas as well. And yeah, it's all good. You know, December's price action in December is normally pretty wacky anyway. You know, order books are thin, liquidity is low, so it's normally not the best time to trade anyway. It's more, you know, educational, time to step back from the charts, you know, focus on the education, and then just have a bit of time away from the charts is good. And then you can hit 2026 just absolutely full on. No BS group, this is amazing. Appreciate that, Chris. So let's continue. From here, there's no objective way to manage the trades that will work for everyone. Now, I wish there was a way I could just say, okay, when you 1-to-1, stop loss to break even. When you 1-to-2, take profit. When you 1-to-3, take more profit. When you 1-to-4, it doesn't work like that. It's different for each person's system. But I can run through a few tips to help you diagnose where to take profit and how much profit to take. But before we get into those few objective tips, the biggest one is journaling. Finding out, identifying which trades worked out best for you, which trades didn't, and seeing what you did during those really good trades. How did you manage those trades? Where did you take profit? That is truly how you optimize your system and optimize yourself for the market. And look, it's not sexy, it's not fun, it's quite boring. But what it is effective, okay? It is truly effective. So just marking up your trades, dropping them in, spend 5 minutes on a night just putting the trades in. And you know what? If you can't be bothered to put in your trades, chances are you're taking too many trades. Okay, so that's a good thing as well. It'll hopefully stop you taking too many trades, because at the end of the day, you won't want to put in 10 trades into your journal. That will really, really help. Okay, so let's go over a few ways to objectively manage a trade. We've just bounced up nicely there. So, make sure there's no questions. Have a sip of tea. So, when you're in a trade, okay, and you're looking to take profit, the best thing to do is look to the left-hand side of your chart. So let's go in the, oh God, let me get out of here. Okay, so when you enter a trade, okay, so we've got the 3 main time frames. We've got a higher time frame. I use the 1 hour and the 4 hour. Then you've got your 15-minute, your 30-minute, where I actually look for levels. And then you've got your execution time frame, where you look to enter the trade. That's where you're looking for confirmations. Your middle time frame, which is for me, is like the 15-minute or the 30-minute. That's where I look for take profit levels. So again, this is, we've gone over this in a few previous parts, but your higher time frame is where you're identifying your environment. What is price doing? And you don't have to, a lot of things in trading, people try and make super objective. You don't need to make this that objective. On the higher time frame, what the hell is going on? That's what we're trying to do. On the mid time frame, which for me is the 15-minute, 24-minute, 30-minute, that's where I'm identifying my levels. Okay, that's where I'm looking for areas to buy and sell from. You'll see me do that on my lives on a night. Then we've got our execution time frames. These are 1 minute, 3 minute, 5 minute. These are where you zoom in, you're a sniper, you zoom in through the scope and you're looking to take that shot. That's where you're looking for confirmations. I look for take profit zones on my middle time frame. So my 15-minute, or on my 30-minute time frames. And what I look for, sometimes I do weave in some more advanced things here and there, but mainly I look to the left-hand side of my chart for areas we've reacted before, and I take partials there, keeping it very simple. So let's say we entered a buy position. We'll go on to a fresh chart so we can actually see what's going on. So I'm on my midterm time frame, my 30-minute time frame, the time frame where I use to mark up the charts. From here, what you can do is identify previous resistance. So let's say we entered the trade here. Okay, we entered here. What I would look to do is take profit. Literally look to the left-hand side of my chart and identify resistance. Okay, so we've got resistance here. We've got resistance here. And then we can also zoom, further out. Go look for areas above. We'll have to scroll a bit back here. And then look for areas again. So here, resistance. Okay, that's areas I'm going to be looking to take profit. Just look to the left-hand side of my chart. And I know we've done that in hindsight, but in reality, if we just go back here, okay, we can see previous resistance, clearly. Previous resistance, clearly. And then up there, back on the chart, there was previous resistance. Just simply looking to the left-hand side of your chart and finding areas where price has bounced off before. I look for candle bodies as well. So I don't look at the wick, I look at the bodies. So it would be at the bodies here. And then up there it would be at the bodies of the candle. Okay, why do I, first off, let me know if that makes sense, and I'll go into why I do that. Okay, first off, let me know if that makes makes sense. But psychology of trading, they thought it was, yeah, Tom Hogarth's brilliant. Like he is very good psychology, very good tips. How to identify resistance. So, like always, the easiest way to identify support and resistance, the most basic one, is looking for floors and ceilings. So, finding areas where price has reacted. Okay. If we enter here, let's so we can do it very cleanly. Start new. Okay, let me move this down. Let me get this. Move this all the way down. Okay, let me remove this to make it not confusing. I don't know what the hell I was marking up here. I think this is from another Bootcamp live, but we'll go over. It's a good question. Let me just remove this. Remove this. Okay, so if we entered a position, let's go here. So if we entered a position down here, okay, what we want to do is just look to the left-hand side of our chart. Keep it simple. A lot of times in trading, you don't want to overcomplicate things. Look to the left-hand side. Okay, where have we found a resistance? Where have we found a top? Here, we can clearly see price has moved up and then reacted from and come down. This is a ceiling. Where has price come up to and reacted from? Here is a ceiling, okay? These are both areas where I would look to take profit. Now, why would I look to take profit there? At these levels, we have clearly ran into a lot of orders. Now, always looking at price in terms of orders, because that's what moves price, liquidity, orders. Clearly, there was a lot of orders at this level and price couldn't push past it, and then we came down. So when we go back up to this level, we can anticipate there to be some leftover orders there. It's like eating a big meal. Price has pushed up to here. We've eaten a lot of food, and then price has got full and moved away. When we come back up to here, chances are there's some leftover food. There's some crumbs, okay? That could end up being resistance for us. So we want to take profit there. There's orders there. And again here, we've come up here, we've had a big meal, we've moved away. We've got full and we've left. When we come back up to this level, we anticipate price to again find resistance there, leftover food, leftover orders, and therefore it's a great place to take profit for a couple of reasons. One, we might find resistance there like we did before, and we might react and we might come down. Second reason is, what was that? Second reason is price gravitates towards where there's a lot of orders. Clearly, there was a lot of orders at this level because when we hit this level, we bounced and came all the way down. The market loves orders. Why? Institutions love orders. Institutions want liquidity. They want orders because a big problem they have is filling their orders. Institutions are like a really, really, really hungry guy, okay? So when they come up to this level, Okay, they get a big meal. They're really happy. They come away. If you're a big institution, a really hungry guy, you know that there was a lot of food up here. So what you're going to want to do, you're going to want to push price up there. You're going to want to go up there so you can again have a really good meal. Let me know if that makes sense. Hi, how do I set as many £10 against lots? Should I be looking for smaller first, build gradually? How can I set? Do you mean, Peter, how can you set a £10 risk on each trade? Is that what you mean? Appreciate that, Katie. Peter, if you want to know that, just drop me a message. I'll send through the video. There's a Telegram linked on YouTube on the description. Drop me a message and I'll send you through the video. Yes, Scuba, exactly. This is the second point that I'd get into. So first off, before we get into taking partials, let me know, does identifying the ceiling, and why does that make sense? What is liquidity? Great question. Liquidity is how easy it is to buy and sell. So liquidity is just that, how easy it is to buy and sell. So for example, gold is extremely liquid. There's tons of buyers and sellers. If you want to sell gold, it's really easy. If you want to buy gold, it's really easy. There's a lot of buyers and sellers constantly. Whereas if you go to sell your house, there's not a lot of people in the market looking for your house, okay, particularly. So it's going to take longer to sell. It's not as liquid market. There's not as many buyers and sellers for your house, okay? Let me know if that makes sense. So liquidity is simply how easy it is to buy and sell an asset, okay? And the reason liquidity is important is because big institutions, okay, that if they want to unload a lot of an asset, they want to sell a lot of an asset, they can't if there's not a lot of buyers and sellers to sell to. If they want to buy a lot of an asset, okay, it's going to be very hard if there isn't a lot of buyers and sellers to buy the asset from, okay? So they like liquidity. They like buyers and sellers because it makes it very easy for them to buy a lot of an asset and sell a lot of an asset so they can get in and out of their position. It's great to be in a position where you've made a lot of money, but if there's no one to sell to, then you're screwed. Okay, imagine you've got imagine you've got a car that's worth $10 million, okay? That's great. It's only worth $10 million if you can find someone to buy it for $10 million, okay? Does that make sense? Let me know if that makes sense. So a liquidity sweep, that's going more into SMC, but a liquidity sweep basically means, so if you, above highs and below lows, there's liquidity, also known as external liquidity. This is going a bit down the route of something else, but we'll go into it anyway. So external liquidity is orders above or below a high or low. External liquidity. So, excuse me, in this example here, liquidity, external liquidity, is above this high and below this low. It's orders outside of this range. There's also internal liquidity through here. So there's liquidity throughout the market. But when people talk about liquidity in trading, they normally on about external liquidity. A liquidity sweep means you come up here, grab this liquidity, and then run away. It's like a raccoon stealing your food, okay? Institutions, what they do is they come up here and they eat a lot of food and then they run away. But imagine you're like a little raccoon and you want to, steal food. You come up here, you grab the food and you run. Okay, that's a liquidity grab. You're going up, you're grabbing the orders and you're running. So you're grabbing those external orders there and then you're running the other way. That's what a liquidity sweep is. I appreciate that, Katie. I appreciate that, and I do quite like the fact that I'm very confident in any. This is why I ask like any trading questions, because I'm very confident. If you do have any questions in trading, I think I can give a good answer with context as well, with why it happens, which no, KT, it's all good. It's all good. So again, taking profit, we're looking for a buy position. We're looking for ceilings, price, areas where price previously reacted. Why? Because if it previously reacted there, chances are it will react there again. So we want to get out of the position at least a little bit to lock in profits in case we do reverse. And then also, because we reacted there once, chances are there's orders there. The market likes to gravitate towards orders because institutions want orders. That's why we set take profits there. Let me know if that concept, that makes sense. And also, if you want to, mark up some previous resistance, previous highs, previous lows, where price has reacted before, and send me through your chat in Discord. At me in Discord, or send them through to me on Telegram. I'll take a look, okay? Okay, perfect. So, the next step is, okay, we come up to this first area of resistance, okay? We're in this, let's say we're in this buy position here. Okay, we've got a stop loss into this low. Hopefully we would have got a better entry than that. But still, I'm pretty sure this was given in the group. I'm pretty sure this trade was spoken about, I think. But let's say we enter this position. When we come up to this level, do we want to close the full position or close part of the position? Let me know in the chat now. Do we want to close the full position or do we want to close part of the position? I do think this has been a very valuable live as well, especially for beginners. I think it's done well. Katie, I do have a long drive after this, about 4.5 hour drive after this, so it's gonna be good. After like a 3 hour drive earlier, so a lot of moving around today. Exactly, part of the position. We want to close part of the position. Why? So that gives us the opportunity to make more money on the trade, okay? And here's how I decide how much partials to take. Normally I take between 15 and 30% of a trade off at each take profit level, okay? If we have a lot of strong green candles, what do I mean by strong? I simply mean the body is very big. Look at these green candles. The bodies are extremely big, okay? If we have a lot of strong candles into a level, I'm going to take less partials because chances are we've got a strong move, we'll continue to the upside, okay? If, we'll go forward on this one. Second, if like this, we are very uncertain, you know, we've got big green candles, big red candles, then I'll take more partials off at this level, okay? So if we've got a lot of big green candles into a level, I'll take less partials. If we're slowly moving towards a level with big green and big red candles, then I'll take more partials off at the position. Let me know if that makes sense. Yes, Chris. Yes, Chris. Stu, I'm being driven up. I can't. 4 hour drive. I need to be on my phone and my laptop. So yeah. That makes sense. So if we've got big green candles into an area where I want to take profit, then I'm going to take less profit. If we've got very undecided candles, so what do I mean by that? Either small green candles or big green candles and big red candles, it just looks very indecisive, then I'm going to take more partials, okay? And that is basically trade management 101. Risking a set pound amount in the trade, so you know what risk to reward you're running at. If you're risking £100 and you're 1-to-1 risk to reward, that means you're up £100. If you're risking £200 and you're £200 in profit, that means you're 1-to-1 risk to reward. And then identifying highs and lows. Well, we've gone over highs, but short position is the exact same, just opposite. Identifying highs where I'd look to take profit and why, and then how much I'd look to take profit on the trade. If we have big green candles into a level, I'll take closer to 15%. If we have small green candles and we're quite indecisive moving into a level, then I'll take closer to that 30% off. And I'll continue to take partials until I've got about 15 to 30% of the position left. And then I'll just leave that until we hit normally a weekly level or something like this. And I'll be looking on the higher time frame for that because I'll want to leave a day trade and let it evolve and turn into a swing trade. Like always, you can definitely, on your laptop, you can definitely, yeah. Should be nice. So Scuba, this is a very, very good point. So when I move my stop loss to break even, until we're running normally 1 to 2 risk to reward in profit, I won't move my stop loss up. I'll look for concrete lows to move my stop loss below. So what do I mean by that? Here we can see a big wick to the downside with going into SMC a little bit. I just call it normal market structure. But when we form a low, a high, a low, and then a higher high, okay, we've formed a low here. I'll put my stop loss under here. And then again, we've done it here. We've formed low, like high, low, and then we've taken it out here. We've formed another low. So I'll put my stop loss under here. And I'll just continue to move my stop loss under previous lows. And if we see how that would have played out, just looking for nice strong previous lows. I mean, we can now put it under here. I mean, well, we wouldn't really move that; would get stopped out there, but that's absolutely fine. We've capitalized on a large amount of this position, which is really, really, really good. So that's what I'd look to do. I just keep on moving my stop loss under previous lows. If I'm very confident in the move and I don't want to get wicked out, then I'll leave my stop loss at break even and give the trade more breathing room. Let me move this over. What else did we have to cover? Yeah, that's fine. Perfect. Is that because you have a big margin, not moving stop loss to break even, or just confidence in a trade and don't panic? I'm getting there. Katie, so the reason I moved stop loss in the previous low is because I don't know if that trade's going to reverse. Something which is very important. I haven't got a quiz for this one, unfortunately, Katie. I think we've answered a lot of questions, so I hope we've cleared up anything that could come up. I think we've nailed down pretty much everything. But the reason I moved stop loss into previous lows is a good quote which I love in markets is, if you think you know anything, you know nothing. Excuse me, you never know what's going to happen. Even if I'm extremely confident in a move, I don't know that it's going to happen, okay? Anyone in trading who says they know price is going to do this is either 99.99% of the time they're lying and they don't know anything, or they're insider trading. That's the only way you can know something, okay? So I don't know that price is going to continue up. So I want to secure profits. I want to move my stop loss up. And look, a lot of the time I'll get wicked out and it'll go my way. But a lot of the time I'll get wicked out in profit and it'll continue to go that way and I've locked in profits. A lot of the time as well, I'll be able to continue to move that stop loss below the low. And a small day trade can turn into a huge swing trade of like 1 to 30, 50 plus risk to reward, okay? And look, not every trade is going to be like that. Maybe 1 in 20, 30 trades will be like that. But that one trade, which you do continue to move stop loss to break even, will just make huge profits. A lot of the best performing members that I see in the group, most of their profits across the month come from just 2 to 3 big trades. The rest of their trades are pretty break even, but just a few of their trades across the month make the vast majority of their profit because they allow their winners to ride and they give their winners breathing room and they follow their winners up. Okay, it's just like a great analogy which I really like is if you have a business which is just losing money, you close that business. And a business is exactly like a trade. If you have a business which is making money, you want to give that trade what it needs. You want to give it breathing room. You even want to add to the trade and let that let that business turn into a huge business, okay? Let that trade turn into a massive trade. And this is something which is extremely important, okay? And so I'm going to leave you with this. Please make sure winners are bigger than losers. Let your winners ride and cap your losses. I always put a floor on my losses, but no roof on my winners. Okay, and hope that makes sense, guys. And we'll finish it up. There. Since I've traded it, just allows you to think of it differently. Nice, Chris. Los Blancos, I redid this one. I redid yesterday's tonight because when I did it yesterday, the connection wasn't too good and it was very laggy and stuff like this. So I wanted to redo it and make sure it was all good. It's okay. Preservation of capital is 100%, Katie. 100%. Okay, guys, I appreciate everyone, tuning in. If you've got any questions from this one, please don't hesitate to drop me a message on Telegram or drop me a message on Discord. And yeah, hope everyone had a great night, and I'll see you all in a bit. Take care, everyone. Have a great night. If you've got any questions, drop me a message. And if you're not involved in the private group already, you need to get involved. See you in a bit, guys. Take care. See you in a bit, Jason. See you in a bit, Heath, Los Blancos, Tony, Simon, Katie. Who else have we had on here? Blakey, Light Always, some great questions tonight. Scuba, and Katie, some really good questions. Chris, other Chris, we've got a few Chris's.